Adam, thanks for joining us again. Another one of our Tav on Money series. Um, there's been a lot of noise recently around starting up businesses and the necessity and comparisons with the financial crisis. Do you see there are comparisons there?
Well, clearly, there is always going to be a degree of comparability when a country enters a recession. Inevitably, certain sections of the workforce find it more difficult to find more traditional types of employment and therefore become what the wonderfully named Dane Strangler at the Washington, D.C. Institute of Policy refers to as necessity entrepreneurs. That is a combination, I think, not necessarily just of necessity, in other words, the inability to secure other employment, but often it's a realization that those who've been in the workplace for a considerable period of time frequently have accumulated over their working life marketable skills, knowledge, contacts, potential customer base, all the sorts of things that can be leveraged to give a new startup a head start and a much better chance of success.
And just looking back to sort of the financial crisis, what do you see as similarities in terms of the economy then, and or differences with the situation that we find ourselves in now?
Clearly, the most measurable piece of information that we have to hand is the severity of the recession that the world economy, and particularly the UK, is now in. At its height, the financial crisis led to a reduction in GDP of 2%. As of this morning, we're told the UK economy shrunk in the last quarter by 20%. So you don't need to be a financial genius or a mathematician to work out that, on paper at least, this is 10 times worse than that. Now, can we draw any straight line parallels? Not really, because we're in a very odd kind of phony war at the moment, because furlough and the job retention scheme is to a large extent masking where we might be going on this, and nobody really knows what the unemployment numbers will look like until furlough has wound down. We do know that since we entered lockdown, the employed numbers have fallen by some 750,000, but I think that's probably masking what the real number will look like. If you do draw parallels to the financial crisis, which of course, apart from bailing out the banks, businesses didn't receive much in the way of government support, what we saw was an increase in registrations for limited companies, so startups, over the following 2 years, spiked by about 1 million. So I think it's absolutely inevitable that, given our current circumstances, we're going to see another surge in those groups of people who will find it difficult to get back into the workplace. And broadly speaking, they seem to be splitting out into the very young end of the workforce and the more mature end of the workforce, the over 50s. Those two groups are particularly impacted. And you can, from that, I think, reasonably expect to see a very significant uptick in the amounts of individuals deciding that launching their own business is the way to go, and now is the time to do it.
Okay. We've seen, talked to, and helped a lot of startups over the years. What do you think are some of the key criteria for somebody thinking about this right now? I mean, obviously we're in the sort of the eye of the storm at the moment, but what would you think are the sort of basics that people coming to terms with what they're going to need to do should be thinking about right now?
Well, I think we first of all have to start with what I alluded to in our conversation just now. What is it? What is the idea, and does it spring from any particular skills, knowledge, contacts, abilities that you might have acquired along the way? and in which case, how can you create a framework to leverage that in a profitable way? So basically plan, and plan again. I won't quote what the army says about poor planning, but it does lead to poor results, let's say. So equally, it may be at the younger end of the scale that you haven't yet accumulated that much in the way of marketable skills or contacts or whatever it might be. But it may well be that you have an enthusiasm, an idea, something that you think you can turn into a profitable enterprise. But again, it's all about taking your time, thinking it through properly, and putting together a plan. So the first thing that anyone thinking of taking this step should do is not just to draw up a business plan. And by the way, there are some very, very good online resources at no cost to help you put together a business plan. Plus, there's quite a lot of government support around it as well. So it's not something to be enormously terrified about, but it is an absolutely necessary step. Having put your plan together, make sure you get it challenged. Make sure that it goes in front of someone who is appropriately qualified to have an opinion on it and who isn't afraid to challenge your assumptions and essentially kick the tires on it and make sure it makes sense to an unbiased third party.
So having it challenged, I think that's a really sound bit of advice. On the other hand, we've all experienced the fact that, you know, the friends and family bit of advice around now might well be, are you nuts to start up a business in the teeth of this gale? You'd be crazy to do that. I wonder, is there anything that we can look at that would challenge that assumption that you shouldn't ever start a business up in the middle of the catastrophic recession?
Well, we all know that change brings opportunity, and there's a very impressive roll call of businesses, global businesses in many cases, that were started during a recession for reasons of necessity. And off the top of my head, I can think of General Motors, Uber, Airbnb, Burger King. These are all businesses that were started in pretty severe recessions and have gone on to dominate their particular space. I suppose what I'm trying to say is success or failure will not be determined by the current economic circumstance. It will be determined by the quality of the business proposition and the person or people who have decided to launch it. And the fact that starting a business in a recession may be considered to be a more difficult proposition, I would argue is a pretty good trial by fire test. Anyway, I mean, if it can succeed in the sort of circumstances that we're likely to be looking at, it's probably good to go.
I mean, clearly, although this recession and this crisis has a different profile to the last financial crash or the last crisis, the oxygen of any business is pretty much always going to be cash. Other than government support, we hear that cash is in pretty limited supply out there at the moment. What do you say to the business owners of the future thinking about how they're going to finance their business?
Back to planning. Don't do anything until you have identified and secured the financing that you will need. It is absolutely true to say that going looking for finance when you need it is much, much harder than looking for finance when you don't urgently need it. Lenders tend to be very disinclined to lend to people who are in that sort of trouble. So plan it properly. There are a number of different ways of approaching that and sourcing the finance you need. But first of all, be accurate about the number you think you're going to need, and then add some, because it'll never quite add up to what you think it will. Sourcing it really is a matter of where you are personally in your employment cycle. In other words, older people by and large have hopefully been able to acquire some assets during the course of their working life, whether that's cash savings, equity in a property, or hopefully assets in some form of pension arrangement, and therefore self-financing for them can make a great deal of sense. Not relying on a third party to lend to you is always a very nice place to be if you can do it. For the younger entrepreneur, that may be more challenging. They may not have that sort of cash availability, and it's frequently known that people tend to turn to friends and family. Although there is a successful government initiative called the Startup Loan Scheme, which will provide limited up to £25,000, but nonetheless reasonable startup facilities for those people who can't source cash from any other source. I think at the other end of the scale, the older entrepreneur would, generally speaking, be well advised to do their homework properly. And there are a number of very good ways of going about leveraging their own assets. And one that we see used all the time is pension-led funding, where they can use their own accumulated pension pot to finance their startup and indeed help scale up their startup in due course. And that can be quite a rewarding experience, because if successful, can lead to both an increased pension value as well as a successful enterprise. So there are lots of ways around doing this. I think rather than spending your time either hiking up and down the high street or nowadays Googling left, right and center, some of the business finance aggregator sites are probably a really good place to start. Sites like Alternative Business Funding list over 100 potential sources of finance. More importantly, they rank them in order of suitability as well as appetite to lend to you, so you can be sure that what you're getting is what you actually need. In the same way that you would nowadays probably source your insurance needs from a comparison site, it makes a great deal of sense to source your business finance needs from a similar sort of comparison site that specializes in that kind of product.
Okay. All right. Well, I think we've covered off a fair amount there. Thank you very much for your time, and look forward to seeing you for the next Tav on Money.
You're welcome.